Hey everyone, this is Ryan with Stock Investing and Trading 101. Today we're going to be doing a stash portfolio update. I think my stash portfolio is at the highest return that it's ever been. The portfolio has been open now for about 11 months, so a little bit less than a year, and the total return is about a little bit over 10%, which is a pretty decent return. Usually the market averages about 8% per year, so 10% in less than a year is definitely acceptable for me. Let's break down the portfolio here. Currently, this is mainly a dividend portfolio. So mainly I'm looking to invest in like long-term dividend-paying growth stocks, dividend growth stocks. And my biggest holding in the portfolio is Match the Market, which is an ETF similar to the SPY. I believe this one is this is an iShares Core S&P 500 ETF, ticker IVV. Very low dividend yield. Usually the market or the SPY has a dividend yield of less than a couple percent. But it is a solid core position of my portfolio. The next biggest holding is Johnson & Johnson, which is something that I'm still buying into pretty regularly. I have an average purchase price of $130, which I think is a really good price. They've been having some relatively, in my opinion, short-term issues that should pass with legal lawsuits and trials and things. So right now I'm actually purchasing $10 more worth, but this is something that I'm going to be building a position on and holding for a long period of time. Hopefully that will work out well for me. The next biggest holding is Delicious Dividends. This is an ETF, ticker symbol SCHD. Essentially, this is just a dividend ETF of all dividend-paying stocks. Has a yield of about 3%, which is, I guess, average to a little bit low. But once again, it's a nice foundation, and it's got a nice mixture of dividend-paying stocks in there. That is currently up almost 11%. Next, we have Microsoft at 5%, up about 14%. This is something that I'm buying slowly and surely, trying to find the best prices and deals that I can, but Microsoft has actually been performing very well, so it's hard to find those deep discounts. Next, we have Apple at another 5%, and Apple actually had some good news yesterday. They are kind of undercutting Disney and Netflix's streaming service. I think their price is only $5 through Apple, currently up 30%. And this is something that I've been averaging into pretty much here and there. And there was a lot of negativity around Apple just a few months ago during this dip here, if you see about a month or so ago. And I took advantage to purchase a decent chunk there, and it's currently up 30%, which is very nice. Next, we have Slow and Steady. This is 4% of my portfolio. This is another ETF. This one is ticker symbol SPLV. Essentially, it is the Investco S&P 500 Low Volatility ETF, 2% dividend yield. So this is pretty much just a low dividend yield, really safe play. And looking at the performance, it's just been kind of a slow and steady increase over the last 15 years. So, in my opinion, this is a great stock and currently performing well for me. Under that, we have 3M. 3M is an industrial stock. They make tons of goods that I'm sure you've seen before, and they've been having a lot of issues. The trade war has not been treating them well, so their stock price has been currently down 18% in the last 12 months. I'm currently down about 3% on my position, but I'm still continuing to average into this position. I like 3M as a stock and a company, and I can deal with some short-term negativity around the stock if I can get a good price. So because of that, I'm still buying 3M. Same situation with AbbVie. There's been a lot of negativity around AbbVie. AbbVie is a pharmaceutical stock. So it got nearly a 7% dividend yield, which is very nice. They've been growing dividends now for many years. I believe they're a dividend aristocrat or a dividend king. Their parent company is Abbott Laboratories, which has been around for many, many years. Currently down in the last 12 months, almost 24%, which is a big chunk for a company like this, so I've been taking advantage of that and buying more and more. Currently down only about 5%, which still sucks, but it's a long-term hold for me, and they pay a nice dividend yield, so hopefully that'll turn around soon. Next we have Young Money. This is an ETF of new and growing companies, not necessarily dividend companies, so they have like a less than 1% dividend yield. The ticker symbol is MILN. It says it's the Global X Millennials Thematic ETF. So essentially this is just new and growing companies. We have Twitter, Starbucks, Pfizer, Walt Disney, eBay, and there's a lot of potential with this one in my opinion. It's been having a up and down last few years, but overall it's been performing pretty well. Next we have Altria, which has actually been going through quite a lot of controversy. They have quite a big stake in the Juul pods, the vaporizers, and there's been a lot of talk in the media and in the news about the vaporizers, and I believe even some deaths linked to vaping. I believe most of that is from aftermarket and black market products, not Juul pods or things like that, but nonetheless, there's been a lot of negativity around it, and some cities and states are even banning some of these vaporizers and the vape products for the meantime. Currently down about 3%, but, or no, $8, so a small percentage, but it does have a high dividend yield, about 3.5% down. Dividend yield is nearly 8%, so between 7 and 8%, and they've also been growing dividends now for many years. This is a great company in my opinion. There's a lot of negativity around it, and it's going to be probably continue to have negativity around it for a short period of time until some of this controversy with the Juul pods, and then also there's a talk of an acquisition or a merger between Altria and Philip Morris, which would make Altria into an international company. Currently they only deal in the United States, so that could be a big thing for them too. Next up we have Kraft Heinz. This is about 3% of my portfolio, down 8%. I'm sure many of you have heard about Kraft Heinz this year. They're currently down in the last 12 months almost 50% of their stock value, which is huge for a company like this. They've been not performing very well for the past few years. They have a nice 5 to 6% dividend yield, which was actually cut not too long ago down to this yield. And their future is kind of in question, I would say, right now. This is a kind of risky stock for me to be investing in, but they have the nice dividend yield, and the value is just a nice value in my opinion. So it's only 3% of my portfolio for a reason, but I think at these levels it may be a decent buy. And actually the price just jumped up to about $30 from $26, so it had a nice few percent move up. Hopefully it might have found a bottom, and we will see. Next up we have Tesla at 3% of my portfolio, and I actually started buying into this position when Tesla was coming down. I believe it was about $300, and at that point I thought the price was a very good price, and I thought I was buying the dip. It didn't work out in my favor, currently down 15% on Tesla, and because of that I've stopped averaging into the position. First of all, they don't pay any dividends, and secondly, it's a bit too speculative for me. They could perform very well, or it could not perform well at all. So for me, there's just better and safer plays out there. Next we have Boeing, which has actually been making somewhat of a comeback lately. They had a lot of issues with their 747 jet, and it was out of commission, and I think it still may be out of commission, but things are kind of clearing up from all the negativity around that, and they have about a 2% dividend yield, and the price is slowly climbing back up. We've been kind of up and down, and the price is still kind of headed back up again, so up about 3% on that, which is decent because I was just down on it, so I was down on this position for a while, but now it's up, and it feels pretty nice. Next up, we have AT&T, which is 3% of this portfolio. It's actually a bigger part of my Robinhood portfolio. I actually hold about 100 shares just on my Robinhood portfolio. And AT&T has recently surged up to about $38, almost $39, which is a pretty nice price for them. I had an average cost of about $36, so that's $2 per share. Dividend yield currently is about 5.5%. It was actually around 6 to 7% when it was down at $36 per share. So now the dividend yield is about 5.5%. But I'm really a big fan of AT&T. They do have a lot of debt, but they also have a high dividend, which they've been growing now for years. And I think the price up here at $38 may be a good price for them. I think the $36 range was a good deal. I think 30 is a really good price. If I could get AT&T down at $30, I would be quite happy with it. But I'm still quite happy with my price and how it's performed, and they just had a big rocket up in price. Next up, we have Walt Disney, up about 4%. This is about 2% of my portfolio. Walt Disney does pay a dividend, but it's relatively small at just over 1%. And this is a company that I'm invested in, first of all, for the potential of growing dividends, but also they are branching out. They have pretty much a monopoly on some movies and also news. They are in quite a bunch of things. They have the streaming service coming out. They have the theme parks. They have the movies, which they have exclusive rights to, like Star Wars and the Marvel movies. And because of that, I am going to invest in them. I think they have the potential to keep growing and growing as a company, and also growing their dividends. So since I'm a young investor, I'm going to hold on to some of these, and hopefully I can get a nice yield on cost in the future here. Next up, we have McDonald's and Starbucks. I kind of intertwine these two stocks together because, in my opinion, they're relatively similar. I really like these stocks a lot, and I've been actually averaging in lately more because I want a bigger position. They're somewhat overvalued, in my opinion, right now. Starbucks actually took a dive a couple days ago, and I took advantage of buying some of that. But McDonald's has about a 3 or 4% dividend yield. Starbucks is only about a 1.5% yield. But I think both of these companies are going to perform very well in the future. And currently, if you look at the chart, this is a 15-year chart for Starbucks, and we're pretty much at all-time highs. And in the past year, it's gone up 70%, which is huge. It's an amazing return. So I'm quite happy with my returns from them. Next up, we have blue chips. This is an ETF of the top like 250 companies in America. Pretty much this is half of the S&P 500. This is the Vanguard Mega Cap ETF. This is only a 2% dividend yield, but it holds some amazing stocks like Amazon. We have Alphabet, Facebook, Apple, Microsoft, Berkshire, Johnson & Johnson. So you see some really big names in here, and you can't go wrong with a basket of all the best stocks. Next up, we have Coca-Cola, up 15%. I'm sure everyone knows Coca-Cola. This is a safe dividend stock. They've been performing well now for many years. There's been a lot of people, such as Warren Buffett, who have made really good money investing in Coca-Cola. About a 3% dividend yield, and honestly, there's not too much to say about it, but it's a good company, and I really like the solid dividends and the growth of dividends. Next up, we have Amazon, up 20%. Everyone knows Amazon. This is the growth beast, and they have been killing it for quite a while now, at least 10 to 15 years. And it's going to be interesting to see where the price goes. They do not pay any dividend, which is kind of off-putting, but it's one of the best growth stocks in my opinion, and that's the reason that I'm holding them. Next up, we have PepsiCo. This is similar to Coca-Cola, but I actually prefer PepsiCo more. They have a bigger basket of diversification in the companies they own, so they have drinks such as Pepsi, Mountain Dew, Gatorade, Tropicana, and they also have food such as Doritos, Quakers, Lay's, Ruffles, Cheetos. So they have quite a bit of different things besides just the carbonated drinks. Next up, we have High Voltage. This is an energy ETF holding all energy companies, about a 3% dividend yield. I've been performing pretty well. I'm a fan of energy companies. They typically have a nice high dividend yield, and I'm up 16% with this ETF, so I can't complain. Next up, we have Walmart at 1% of my portfolio. This is something I'm building a position on still. They have a dividend yield of about 2%. This is a growing dividend, and they are up about 22% in the last 12 months or 1 year. So they've given me a nice return, and I think they still have room to go up in the future. Next, we have Real Estate Tycoon. This is ticker symbol VNQ. Real Estate ETF from Vanguard. 4% dividend yield. They hold a lot of cool companies. They have American Tower, Simon Property Group, Public Storage. So this is just an ETF of pretty much real estate companies, and it pays a nice solid dividend yield, and the stock price follows the real estate market. Next up, Caterpillar at about 1%. This is up 7%. Caterpillar has actually had a tough time during the Chinese trade war. Over the last 12 months, down about 6%, but luckily I was able to score up some good prices, so I'm still up on my position. Something that I am interested in buying more of, but it's not on top of my list as of now, but definitely going to be keeping an eye on Caterpillar. Next up, Duke Energy. This is an energy company, if you couldn't tell from the name. They have a nice solid 4% dividend yield, and they have been going up for many years now, since about 2004, 2005. This year they're up about 20%, and currently I'm up about 5% on them. Next up, Ford Motor, up 3%. This is a company that I have quite a decent position in, that it's kind of a speculative play. A lot of people either hate Ford or they love Ford. It's got a 6% dividend yield, and it hasn't been performing all too well in quite a while now. So as you see, it's kind of up and down and not really making new highs. So it's not, in my opinion, one of the best or safest stocks to invest in, but it does have the nice high dividend yield, and they do have a nice cash holdings to cover their dividend for the near future. Next up, Procter & Gamble. This is up 20% for me. Procter & Gamble has a company that's been around for many, many years. Dividend growth company, currently paying dividends, and they are 2% dividend yield and up 50% in the last 12 months. So Procter & Gamble is a great stock that I think everybody should look into. They have their feet in pretty much everything. So the description says their product lineup is a staple of everyday life that includes $22 billion brands such as Always, Bounty, Crest, Dawn, Old Spice, Pampers, and Tide. So they pretty much are all over the place with what they're in, which is good in my opinion. Gives them a little bit of diversification. And these are all relatively small positions after here, $50 investments. I'm not going to dig too deep into some of these companies because they're less than 1% of my portfolio and not some of my favorite stocks necessarily. I really do like Home Depot. It's just something that I haven't been able to get more of because I've been investing in other plays, but Home Depot has been performing very well. General Mills is another one from the list of less than 1% that I think is another really good stock. They have their portfolio mainly in cereal brands. They've been around for quite a while, a nice solid 3.5% dividend yield, and I'm up 20% with them. We have Nike, Big Money. This is a ETF for all the big banks. Then we have some bonds like Park My Cash, which is a bond ETF, Tyson Foods, Activision Blizzard, and so on. And these are all relatively small positions, which is why I'm not digging too deep into them. I think Costco is another great stock that you might be interested in looking into. Southern Company, another good one. And yeah, so that's my portfolio. This portfolio is about 11 months old, and once again, it's up about over 10%. So I think I got a really good return so far, which is about $675. I'm very happy with my return so far, and I will continue to monitor that and share the results with you guys. And the last thing that I'm going to be jumping into is just showing a little bit about my dividends that I'm receiving from this portfolio. So as you see recently, I just got a nice dividend from Johnson & Johnson for about $2.50. And then I have these small dividends from other companies such as IBM. We have ExxonMobil, Chevron. We got some bonds. So I'm just going to kind of scroll through this to show you guys what a portfolio like this will be collecting in dividends and how exactly I'm investing with my purchases. As you see, I have a lot of $5 small purchases. So yeah, this is a dividend portfolio, and the dividends are constantly flowing, as you see. A lot of these dividends that I'm showing you are just ones from this month. So pretty regularly that I'm getting a dividend. I would say probably close to every other day or every third day I'm getting a dividend or multiple dividends. So yeah, I'm really liking this portfolio. I also have a retirement portfolio which has been doing pretty well, up about 4%, but I'm not going to dig into that one today. If you have any questions, feel free to comment below. If you're interested in investing with Stash and you sign up using my referral link, we can both get a free stock or $5 to invest. So I'll have that link in the description. Otherwise, thanks